Welcome back to the second video on adjusting journal entries, or AJEs. Today we're going to talk about accrued revenue and accrued expenses. But first, I would like to thank you for coming back because I know that last video was super long. This one should be a lot shorter. Accrued expenses and accrued revenue. We end up having to book AJEs for these when we have performed goods and services, or we've received goods and services, but we haven't gotten the bill yet, or we haven't sent the bill yet, okay? So remember, accrued or unearned revenue was when we've billed the customer and received the cash, but we haven't provided the goods and services. Accrued revenue is going to be when we've performed the services or provided the goods, but we haven't billed the customer. Same thing, or similarly, prepaid expenses is when we have paid for goods and services. In this case, it was services, but we haven't received them yet. Accrued expenses is going to be when we've received the services, but we haven't been billed for them yet. Okay, so our example is going to be Daniel Caffey LLC is a law firm, and they're performing services for Dawson Inc. Okay, so during the month of February, they performed services valued at $5,000. Daniel Caffey performed legal services for Dawson Inc. in the amount of $5,000. All right, so in a perfect world, they've performed the service. Daniel Caffey's performed the services. They've earned the revenue. So they're going to bill the customer. So example one, assume Daniel Caffey LLC bills Dawson Inc. on February 28th, 2020. So this would be a perfect world. This is not going to make us have to do an AJE, but I want to show you this first. All right, so Daniel Caffey Inc., he's the lawyer, he's the seller, he provided the services. He is going to debit accounts receivable because he's billed the customer for $5,000. And he is going to credit revenue because he provided the services for $5,000. Okay. On our buyer side, Dawson Inc. is our buyer. Dawson Inc. on 02/28/2020, assuming they get the bill the same day, let's assume it's emailed. Okay, they're going to debit legal expense and credit accounts payable because they've received the bill. We did a few different transactions like this when we were doing the transaction log. Similar, not exactly the same, but hopefully you're pretty familiar with the concept of accounts payables. When we have a promise to pay, we've received the goods and services, but we haven't paid yet. Accounts receivables when we've performed the goods and services, but we haven't paid yet. All right, that's the perfect scenario. No need for an AJE, but that doesn't always happen, especially with law firms. They are notoriously slow with their billing. I don't know why. Maybe it's because they're all rich and they don't need the money, but they're very, very slow. So the AJE we're going to talk about is actually really, really common if you are a lawyer or if you are getting services from a lawyer. So in example 2, Daniel Caffey doesn't bill Dawson Inc. during the month of February. So Daniel Caffey has provided the legal services in February. He has earned the revenue, but he hasn't billed the customer. So we can't debit accounts receivable. So we do the next best thing. On 02/29/2020, we're going to book an AJE. This is just so that we can make sure we book revenue in February where we earned it. Remember our AJEs, the purpose for them is to book revenue and expenses in the correct period, and they will never impact cash. Say it with me again just for fun. AJEs never impact cash. All right, so we're going to debit. We can't debit accounts receivable, so we have this account we use called accrued revenue. And accrued revenue is just like accounts receivable, except we haven't sent the bill. So in every other way, it's an asset. You debit to increase, you credit to decrease. It's just like accounts receivable, except we haven't sent the bill. So we're going to debit accrued revenue for $5,000, and we're going to credit revenue for $5,000. All right. On Dawson's side, remember Dawson is our customer. They're the client. They have incurred legal expenses in February, but they have not received the bill. But they want to make sure they book their expenses in the correct period. So on 2/29, they're going to book an AJE and they're going to debit legal expense, just how they did before, $5,000. But instead of crediting accounts payable, which they can't do because they haven't gotten a bill, you only credit accounts receivable or what accounts payable once you have the bill. So instead, they're going to credit an account called accrued expense. Accrued expense works just like accounts payable, but you haven't gotten the bill. Accrued expense is a liability account. You increase with a credit, you decrease with a debit. So it's very similar to accounts payable with that one difference that you have not received the invoice from your law firm. Okay. So before we wrap this up, let's talk about what happens when they finally do send the bill, those slow lawyers. All right. Daniel Caffey finally sends the bill, the invoice to Dawson Inc. on March 15th. So on March 15th, Dawson Inc. is going to, Daniel Caffey LLC is going to debit accounts receivable, because that's what you debit when you generate an invoice for your customer, your client, for $5,000. And here's the thing though, they're not going to credit revenue because they didn't provide the services in March. They provided them in February, and we've already recorded the revenue in February. So instead, we are going to reduce accrued revenue, because accrued revenue basically says we have $5,000 we haven't billed. At the end of February, we said we are owed $5,000 that we haven't billed. But once we bill it, then that balance is no longer valid. So we're going to credit or reduce accrued revenue by $5,000. So that account will be zeroed out. And we'll have the February revenue in the revenue account, and the accounts receivable for the bill that was sent in March will be in the accounts receivable account. All right, over on Dawson Inc. side, our buyer on 3/15, when they receive the invoice, they're going to debit accrued expense because they will no longer have to accrue it. They'll have the actual invoice. And they're going to credit accounts payable, which is what we credit when we get the invoice. Okay, so at the end of the day, everything ends up in the right account. It's just a timing difference because we have to book the revenue and the expense in February when it was earned by Daniel Caffey LLC, and when it was incurred, when that expense was incurred, when they used the legal services by Dawson Inc. All right, that's going to wrap us up with adjusting journal entries.